Important tips for maintaining swing trading momentum. As we end this book, I'd like to share with you a few important tips to maintain your swing trading momentum later on. One of the things you'll need to remember about swing trading momentum is that managing it well is more of a fine art than an exact science. To successfully manage your swing trading momentum, you'll need to learn how to manage your trading risks wisely, to be a very patient person, and master your emotions. Compared to day trading, where all your positions are closed within a few trading hours, swing trading takes days, weeks, and even a couple of months to come full circle. Its longer time frame requires a different trading viewpoint. The following are 4 important things you should do to maximize your swing trading momentum and consequently profits. Plan your swing trades. As cliché as it may sound, failing to plan is indeed planning to fail. The worst swing trading strategy in the history of traderkind is the wing it strategy. Many traders make the mistake of just following the herd with nary a clue of why they're adopting the strategies of the trading herd and what the risk-reward trade-offs of such strategies. The following are some of the most important things that you must consider when planning your swing trades. 1. Your target profit or rate of return on the trade. 2. Your stop-loss price level at which you'll liquidate your swing trades to cut losses. 3. How much money you're comfortable losing on your swing trades, especially when you're just starting out. 4. Will you need the money you're trading at some point, and if so, when do you need it back? 5. Your swing trading time frame, and 6. Can you afford to hold your position for a much longer period of time in case the price of the security you're holding is still underwater after several months? Remember, the more detailed your plan, the lesser the tendency that you'll rely on your emotions and gut feel to execute your trades, which will greatly increase your chances of executing profitable swing trades. Practice a lot before trading actual dollars. While practice doesn't make perfect, it does lead to excellence. And when it comes to swing trading, excellence means a generally profitable collection of swing trades every year. But I don't have that much money to waste on practicing, you might protest. Don't worry, because practicing your swing trades in the beginning doesn't mean you'll have to stake real money. You can practice what I refer to as paper swing trading. This means taking hypothetical positions using real-time market prices of financial securities. Let's consider paper trading shares of Apple Inc.'s stocks. Let's say that using technical analysis, you reckon now is a good time to take a swing trading position in Apple's stocks. On a spreadsheet like Excel or Numbers, input the number of shares you hypothetically bought, let's say 100 shares, at the actual closing price of Apple stocks today, which we'll assume to be $100 per share. Your hypothetical investment in that position would be $10,000. For the next few days or weeks, monitor the daily closing price of Apple shares until it either reaches your designated profit-taking price or drops to or below your chosen stop-loss price. When that happens, liquidate or sell your hypothetical shares to close your position and complete your swing trade. Through paper trading, you can get a very good feel of how to choose financial securities to swing trade and when to trade them without having to burn through your precious money. Only when you feel you've had enough paper swing trades and feel comfortable risking your own money already should you swing trade for real. Set and forget. As mentioned earlier, you'll need a lot of patience to succeed at swing trading. You shouldn't be monitoring every price tick that happens all throughout the trading day. Once you take a long position, forget it. Just take a look at its price once a day or every other day. With swing trades, you'll need to let your chosen securities build their momentum so you can enjoy potentially high profits. If you micro-monitor your swing trading positions, you'll put yourself in a position where you'll be strongly tempted to liquidate earlier than you need to. When you succumb to such temptations, you'll either minimize your trading profits or maximize your losses because you prematurely liquidated your position. So, just set price alerts near your primary profit-taking and stop-loss target prices and forget it. Just take action when the alerts are triggered. Moving averages for risk management. The easiest and most objective way to see a security's true trend is through moving averages. As such, moving averages can be your best ally in managing your swing trading risks and find more profitable swing trading entry points. Oftentimes, financial securities that are enjoying momentum retreat to their moving averages, the most common of which are the 20 and 50-day moving averages before proceeding with the next price movement. As such, moving averages can help you time your swing trades with fairly high accuracy and ease. Don't think too highly of yourself. Pride usually comes before the fall. It's no different with swing trading, especially during bull markets. Successive and hugely profitable swing trades tend to easily outnumber losing ones, which can get into traders' heads and make them feel invincible. When they feel that way, they no longer tend to question or evaluate themselves, which increases their risk for making cocky and stupid trades. Don't be one of them. Regardless of how many successive profitable swing trades you make, continue making it a habit to evaluate your trading strategies and yourself and look for areas of improvement. As long as you live and as long as you trade, there will always be room for improvement. And when you make even small improvements to yourself and your trading strategies on a regular basis, you become a better and more profitable trader, and you make more money. Always be learning. Financial markets today are more complex and rapid today than ever before. If you're not always learning new things, or if you're not keeping up to date with financial markets and the economy in general, you may run the risk of reading your chosen markets wrong and end up with more losing swing trades than profitable ones. Ditch the micro timeframes. With swing trading, you must focus more on the longer time frames because they're less volatile, and by doing so, you minimize your risk for false triggers or whiplashes that can make you take positions on securities whose prices are still on a decline. The shortest time frame you should consider is daily, nothing less. The longer your time frame, the lesser the false triggers and noise you'll encounter, and the more you can maintain your winning swing trading streak. Value the importance of proper execution. Implementing swing trading strategies properly can substantially increase the chances of profitable swing trades. Improper or worse, non-implementation of chosen strategies increase one's chances of losing trades. In fact, it can guarantee losing trades. When it comes to proper execution of swing trading strategies, the following are important things to prioritize. 1. Choosing the most appropriate tools and strategies for profitable swing trades. 2. Set demarcation lines and stick to them. Not all trades will be profitable, but losses can be minimized by setting stop-loss and profit-taking limits. Without such limits, swing trading losses can grow beyond reasonable limits, and profits that could have already been earned may be wiped out if held on for too long, waiting for prices to go up indefinitely. 3. Consistently executing strategies. 4. Taking reasonable and well-calculated risks. Use numbers to trade, not feelings. For example, only 3 of your 10 swing trades 2 years ago made money, but overall you accomplished an ROI of 50% for that year because those 3 winning trades made lots of profits, while the losses of the 7 other trades weren't big. The following year, 6 of your 8 swing trades were profitable, and only 2 were losing trades. However, the losses on those 2 trades were so huge that you ended the year with an ROI of negative 10%. Between the 2 years, which was better? The first year when only 30% of your trades were profitable, but you ended the year with an overall return of 50%. Focus on overall trading results. Or the second year when 75% of your trades were profitable. Focus on individual trades, but you lost money overall. I bet you'll say that the first year was better, and you'd be right. Learn from your mistakes instead of being discouraged by them. If everybody makes mistakes, why should you think you're an exemption and beat yourself up over them? Consider Thomas Edison on successfully inventing the light bulb that forever changed human history for the better. He failed 1,000 times before finally getting the working version of the light bulb right. When interviewed by a newspaper publication on how he handled those 1,000 failed experiments, he answered that those weren't failures but were simply 1,000 lessons on how not to make a working light bulb. He didn't get discouraged by his mistakes because he knew that mistakes are valuable lessons on what not to do the next time. When it comes to swing trading, nobody has a batting average of 100%. Even computer programs, it's because price movements aren't governed by fixed laws of science, but by finicky laws of human psychology. You only have two choices when you make mistakes. Learn from them, or quit because of them. It's up to you. Successful swing traders remain unperturbed by losing trades, but instead, they persist wisely by learning from their mistakes. Find and stick to trading strategies that work for you. While starting with the most popular trading strategies is a good place to start swing trading, you must evaluate the results you get from your chosen strategy to see if it's worth continuing, tweaking, or replacing. What do you need to consider when evaluating whether a trading strategy is something that you should stick to, tweak, or ditch? One is risk appetite. If your risk appetite is on the low side, maybe you shouldn't even be trading at all. If it's moderate, your trading strategy must be one that carries a moderate amount of risk too. Your swing trading time frame is another consideration. If you want to earn big returns in a few days or weeks, then you must be ready to take on higher risks, as only highly volatile securities can give you opportunities to do so. If your risk tolerance is low to moderate, considering swing trading securities that aren't very volatile, albeit you'll need to extend your swing trading time frame to a few weeks or even a couple of months. If you swing trade on a part-time basis only, it means you can't dedicate as much time for it as those who do it full-time. That being said, it'd be better if you choose to swing trade securities that aren't very volatile. Very volatile but potentially very profitable, securities require closer monitoring for optimal trading results. Taking a swing trading position in a security that's very volatile and checking out its price once or twice a day only can put you at risk of either missing out on a potential bottom price for buying or a potential high price for selling. Worse, you may miss the security's profitable price level and end up with a losing swing trade when its price drops by the time you check it out again. Don't cash in on your profits in one fell swoop. Many financial securities that are on a strong price momentum can continue for weeks and months on end. But the challenge is it's impossible to predict exactly how long bullish momentums run for specific securities. There's always the risk of liquidating too early when a security's price continues to soar after closing a position, and waiting too long that its price has fallen deep from its peak. By taking partial profits or liquidating part of your swing trading positions on securities that are on a strong upward momentum, you can lock in on some of the profits once your chosen security has reached your target profit-taking level. Because there are still some left, you can lock in on more profits if the momentum continues. If the price happens to come down after that, your initial profits could compensate for the smaller profits or loss on the remaining position. Bottom line. All this is useful to you as a swing trader if you are careful to know when a stock starts breaking the trend line. Although you may still trade a stock that is touching or breaking the trade line, you need to be extra vigilant to observe if they meet the second step, the retest and failure step. If the stock follows the second step, there is a likelihood of the trend changing. Armed with this knowledge, you are better prepared to trade in the opposite direction when the trade eventually changes trend. Equally, as a swing trader, you should look out for stocks that are just beginning a new trend and trade them. Stocks that are the start of a new trend are likely to have explosive moves that you can make real profits from. To be able to find stocks that are at the start of a new trend, you need to become familiar with moving averages. Also, for an easier way to identify the different stock stages and the several waves, plus the trends, a good knowledge of moving averages is important. How to make money over and over as a swing trader, trading trending stocks. As a beginner, avoid stocks that are in the trading ranges phase. Buying cheap may not always be a good idea. You need 3 touches to a trend line to confirm a trend. Enter a trade after confirming the trend line. When prices break trend lines, there is a possibility of a change in trend. You are a beginner without much experience in using other technical indicators in combination with trend lines. So get out of the trade as fast as you can before the trend changes. You can predict a change in trend using the 3-step method. Always trade stocks that are beginning a new trend. They usually have more explosive moves. This has been Beginner's Swing Trading Guide for Living, Swing Trading Business Strategy, Trading Rules, Pattern, Tools, Futures, and Options. Written by Scorpio Digital Press. Narrated by Telefrias Jr. Copyright 2019 by Scorpio Digital Press. Production copyright by Scorpio Digital Press.